Good morning, everyone. How are we doing? Everybody survived yesterday's trading? Everyone all right? Maybe a few cuts and bruises, but no broken bones. Oh boy. Well, welcome everyone. I'm JJ. This is tradingsyndicate.org, and this is where we work every day to help regular people make some money in this weird, crazy business. And never had stuff like this happen in the past. Just when you think you've seen everything as a trader, you know, you go and get stuff like what happened yesterday. And it's funny because I was joking around with everybody and I said, you know what? Don't get too short because this guy could just come out and say, psych, kidding. And that's exactly what he did. So uh, we had some nice moves if you were trading them. For some reason, this flu came and got me yesterday again. I was okay for the morning. The rest of the day was horrible. So if you look at the price action yesterday, you had a massive move up, a massive move down to flush, right? And the great Art Cashin, who we lost last year, hit that big move up, big move down, and then a big move up. Art Cashin used to call that the washing machine. And when you have overhanging inventory and it flushes out, if you go like this, what you do is you get people trapped long and you get people trapped short. You take their money, then you take their money, then you take their money, then you take their money, and then when you go and do this, you've taken out the overhanging supply. So we actually got into the gap, which quite surprising because it's a fairly substantial gap from here down to here. So we got into it yesterday, and overnight inventory tonight is long. It's probably about 90 to 85 to 90% long. The market opened up here. You guys would call that an island gap or a cool ranch gap or whatever the hell you guys call that. All that means is in the opening auction, the wholesalers saw size buyers and moved their prices up. This is why it's essential that you guys watch the offer. You know, we had some guy talking about Wyckoff yesterday and all these things, and it's really good, but trading is really simple. Most people don't want to admit it's simple because if it's so simple, how come I'm not making money, right? Well, you're not making money because you don't know how to execute a simple business plan. And that's what our goal is to help you execute a simple business plan so you can manage risk, not blow all your cash, and be able to trade with some form of common sense. Now, yesterday's trading was not for everyone, you know. I wasn't feeling well at all. I was really, really like, it felt like somebody pulled out one of my batteries. So I was just I just sat and watched. And then I went to, I did my afternoon session, and I totally fell asleep here. I woke up, the market was down here, and I put out a warning. I said, if we take out, because the market, when it corrected, it went right down to the close of the previous day. I said, that's a level that may get tested, right? We went down there, couldn't get down, and boom, that's when El Presidente said, I was just joking, right? This was what we call a margin call robbery. Now, I put that out on Twitter yesterday, and I bet you 99% of people don't know what a margin call robbery is. You see, the people who are long up here, they're trading on what we call OPM. We're all trading on OPM. If you're trading futures, you're trading other people's money, right? We trade futures, and what do you put down? $300 to trade a mini, $400 to trade a mini, 40, $50 to trade a micro. Well, it costs a lot more to trade these instruments. Your brokerage firm loans you the rest of the money to trade the instrument. That's called margin. Now, margin works for larger traders too, and when larger traders get margined out, right? It's like you bought a car on finance here, right? And when it takes out that low, guess what? You can't afford the payments. And when it takes out that low, that's when they send the tow truck to come back and get the car. Okay? So that's what happened. This is another margin call robbery. COVID was one of the largest margin call robberies because the people who own 1 billion shares of Apple, guess what? They paid for it in cash and they don't need to sell it. Okay? So if you pay for stuff in cash, you don't get the loan shark coming to your house going, hey, pay up. Okay? You don't have that. So what you have to do is be aware of that. Now we're right back in the over 6,900. We still have some overhanging inventory here. So we're probably going to go back and forth. Now, market profile helps you very quickly identify where the position is. Check this out. The blue stuff is where 70% of your inventory is priced. Okay? Look on the retracement. Market profile traders call this value area high of yesterday. The retracement that just came down took us right to value area high, and we bounced off of that. That means this is the position from yesterday. This is distribution of that position for profit, okay, by large size traders. We came right back down to the cost basis, stopped, the sellers saw buyers and raised price. So how do you trade that? Let's go show you. Right, that's where, right here, is that value area high from yesterday, the top of yesterday's cost basis. The liquidation did not take out the low of end period. Right? We corrected inventory. It was long. We corrected underneath the close. Found the bid. And now you can see the bid has moved up. Right? It moved up from here to here to here. Now the bid's somewhere here. Now we're probably going to take these upper stops because this liquidating inventory was taken in by wholesale heads to be redistributed. The question you got to ask yourself, how many idiots are short under 69.22? Because they were blindly following price. Well, you can tell, my friends, because check it out. This is short covering. This is the smart money shorts covering. This is the wholesale longs. These big green candles are caused by the people who shorted the dumb money shorts who are short under 69.20. Right? You're not an idiot, Charles. You just don't know what you're doing. And that's okay. right? As long as you have risk management, you're going to make mistakes. We all do. I've been an idiot, right? Everyone's made these same mistakes. Anybody who says they've never shorted in the hole, shorted in cost basis, they're lying. This is why I do this every day to show you guys, if you understand the concept of cost basis, you're not going to short at the bottom of a cost basis. Right? This is where you're supposed to be going long. This is where you're supposed to be looking for a short. Right? So it's not that you're an idiot. I'm talking the large size traders who put on positions continuously here. People who are trading way more money than you are, who should know better. People who get paid to trade, right? They should know better. But nobody talks about market structure. Market structure is one of those things. Ask people what buying retention is. Ask people what market structure is. They won't be able to tell you, right? Right? I've been manipulating stocks before many of you were born, right? I'm an old man, right? So I understand how markets work and I understand the structure of them. It's pretty simple. Unfortunately, trading education has been bastardized to confuse people, right? And really, really screw with their heads to keep them basically losing money. So don't feel bad, right? That's why you're here. That's why you're here to learn. I learn something new every day. Hopefully you do as well, right? We're going to be wrong in trading, but you got to use your head and you got to have risk management, right? So when you see that there's a seller, there were sellers here, right? For example, and there were sellers here. But when the market got to these areas, you got to sit and watch and go, look, if I'm short here and this seller goes away, you've lost your backup. If I'm short here and the seller goes away, I've lost my backup, right? So that's like in a bar fight. When you think your buddy who's an MMA fighter is going to back you up in a bar fight, he sees a pretty girl and he screws off to talk to her, and you're sitting there looking at three guys who are going to cave your head in. You better get out of Dodge. Start apologizing, right? Buyers are never in control, right? So, contrary to popular belief, the saying that buyers are in control is one of the biggest things in trading education that is a lie. If prices are going up and you're a buyer, how could you be in control? You're being forced to pay higher. What buyer, little Choi, if I go to you, this is $10. What kind of person is going to say, I'm going to pay 20, right? Buyers are not in control when price goes up. That is another thing. Unfortunately, there's all this these stupid sayings in retail trading. Don't fall for that stuff. The sellers see that there are buyers and they raise price. Buyers are never in control. The only time when buyers are in control is when there's a fire sale. That's it. So you got to be really careful with these statements that, what does that guy from Texas say, that you get off the interwebs? Because most people who are out there talking about trading on X, YouTube, they don't know their ass from a hole in the ground. Now we're going to retrace. We had a big short covering move up. We're going to retrace that. Let's go see where the bid is. Okay. Hey Kevin, how you doing? Thanks, Dave. Cisco, I appreciate the backup. uh, the only reason I use that story is because when I was a bouncer working in nightclubs, I used to see that all the time. A guy would get into a beef with other guys. He'd think his buddy was going to back him up. His buddy sees a pretty girl. He's gone. All of a sudden, uh-oh. That's what happens when your seller goes away, right? The sellers went away here and here. And that's why you got that big move up, because the sellers moved price up. Now we're going to backfill to VWAP. So it's nice kind of back and forth today. Let's see if we hold VWAP and kind of do a move back up. Open up the old trading platform. Oh, gosh. See? So what happens is when price goes up, the sellers, right? There is a wholesale component to this, right? The wholesalers who buy down here, they raise price. I don't believe in volume delta. That's all bullshit. Why would you use volume delta and a footprint chart when a 1-minute candle chart will tell you where the buying and where the selling is? All of that stuff, little Choi, is marketing. Right? Delta is just the difference between the bid and the ask volume, right? So if delta is going up, it means people are taking the offer. If delta is going down, it means people are hitting the bid. Sometimes the price will go up while delta is going down. People can never explain that. It's because there's a size buyer on the bid. The problem with all these footprint, nose print, delta, schmelta, all this bullshit is that you guys don't know how to use it or don't understand what it means. That's why none of these traders who use this stuff, maybe 1% of them actually make money. Right? Trading's been around for hundreds of years. Screen-based trading has only gotten more sophisticated since 1995, when Windows 95 came out. All these delta charts, all of that stuff, that's all in the last 10, 15 years. So if I gave you a time in sales that was 15 minutes delayed and no charts, no delta, no footprints, no nose prints, no fingerprints, no ear prints, would you be able to trade? No, you wouldn't be able to. The current business model in retail trading is if you can't dazzle them with your brilliance, baffle them with your bullshit. Here you could see there are buyers under 69.25. Why? Check this out. This is going to blow your mind. If you're able to pay attention, right, you can see that the market came down to VWAP, down here, and the offer started to move. You know that there's sellers here at 28. If we offer above 28, then you know that the market is seeing buyers and the next seller will be at 30. Why would you need volume delta and a footprint chart to trade that? Why would you look at 3, 4 different things when you could see that the sellers are raising price and you could clearly see that there are going to be sellers here? The top of the candle are where the sellers initiate. How do I know? Because I've been a seller for 35 years. Not a short seller, a size seller. The other thing is the people who teach volume analysis, delta, footprint charts, they've never traded more than 1,000 shares of stock in their life. So how could somebody teach you about buying pressure and selling pressure if they've never worked a 5 million share order during the day? Sorry, they don't. Right? They get a fancy looking chart and it looks great and they can charge people for it. But look, you can see that there's a seller. The seller was here and now the sellers have moved down here. Why do sellers move down? Because they're competing against each other. You don't need a footprint chart to see that. Look how simple it is. Spend a week with me and you'll be able to trade off a 1-minute chart. You could throw all that crap away, simplify your life, right? Watch. Now you can see the sellers are at 27. That's where the offer is. Offered at 27 half, there's a print at half. Can we get a 27 3/4 print? Why would you need a delta at a volume chart? You're going to miss the trade. Focus on the chart so you could actually figure out the trade. Here's the thing. Your trading analysis and to get into an execution pattern for a business setup should be simple. Why? Because you don't have the capacity to look at 6 things at the same time and execute. You don't have the capacity. You're not trained for that. That's why retail traders don't make money, because they're always looking at 20 different things. Who cares about the inside of the candle? Let me ask you something, little Choi. Are you trading 5,000 ES contracts? Are you trading 1,000? What is your goal? Is your goal to make money, or is your goal to try and pretend you're smart? Volume tools are a marketing gimmick. How did people trade for 300 years without screens and without computers? Yeah, then get rid of all that shit, man. Simplify your life. Now you can see the sellers are at 27. Why? Because if you're selling, and Cisco's selling, and Raj is selling, and Dave is selling, I'm going to undercut you guys until we see customers. When customers come in the store, that little red line, the offer, will start moving higher. Right? You can see they stopped selling here. Check it out. Bottom of the candles, that's where the bid is. The bid will follow the offer. Right? Like a dog following somebody with a treat. Right? Buyers are like trained animals. The sellers control the price depending on how many animals come into the zoo. It's really simple, you guys. Right? If you're not trading 5,000 ES contracts, 1,000 ES contracts, you got no business looking at volume. Because you're not a volume trader. All you need to know is where do they sell, where do they stop selling. When they stop selling, you go long and you become the supply. When they start selling, you go short and sell next to the guy who's pushing the market lower. When it's choppy like this and the candles are only a 0.6 ticks, leave it alone because business is slow. Get it? This ain't rocket science. We're not doing cold fusion or trying to find the cure for cancer. Right? This is trading. What is the most important thing that a trader needs to know? They need to know where the inventory in the market they're trading at is priced. So if you're trading, I don't know, if you're trading spices, you need to know where people have paid for it, so you're not trying to sell something at 3 times what everybody else is. Right? You have to manage your expectations. The footprint chart is one of the biggest disservices given to traders. The footprint chart, delta, what is that other crap where people, the big volume orders are in. What do they call that? What is that crap called? Right? Yeah, bookworm. Yeah. All that shit is just useless as tits on a bull. Excuse my language, right? This is the year where there's no bullshit, right? 2026 is the year where we cut through the bullshit. Now, the next seller up's going to be up here, right? The overnight point of control is here, right? That's where all the supply is. That's a distribution. Watch the offer. Now we're going to see where they sell into it. Where here do they sell into it? You don't need a footprint chart to see that. You don't need bookworm to see that. The offer is moving up. The buyers will follow the sellers like an obedient little puppy. How do I know? Because I've sold billions of dollars worth of stock into U.S. equity markets over at least a 25-year period before I had my heart attack. And one day I'll do it again. There you go. Look for sellers there. See? Offer lifts, no print. Now, did you need bookworm, footprint, nose print, delta schmelta to figure that out? Well, I knew there was going to be a seller at 30 and a half. I told you 2 minutes ago. Boom, there they are. So if you were long 28, sell at 30 and a quarter. See how simple it is? Now let's see if London could get underneath 28 and a half. London loves to shake this thing loose and get cheap inventory. If it can't, we will go up to 32. Look at the offer lift. Buyers are coming in. Sellers are raising price. Sellers start competing. Then they start lowering price. Most people don't even know what inventory is, and they don't even know that there's a wholesale element to this market. If you don't know those two things, you're doing business and you have no clue what the hell's going on in the business. It's not fair to you to ask you to put your money to work when you don't know what the hell's going on. Right? 31 and a quarter, that's where the sellers are now. Buyers are coming in. They're not in control. Who wants to pay? If I could pay 28, why the hell would I pay 31 unless I'm forced to pay more? Think about it. Unfortunately, retail traders don't use common sense. They abandon common sense because they don't understand that this is a sales chart, right? You still in a short position? I don't know. Is that a question? Or is Cisco? Oh, okay. If we take out that overnight high, right, we're going to run these stops now. See which one of them get run, because those stops, when you run them, they're going to create buying because there are automatic buy orders there. When those stops get triggered, the wholesale traders who are long here will either sell into it or lift price depending on. If there's a lot of customers, they're going to raise price. If there's not a lot of customers, they're going to hammer this back down to 30. So watch for that. Look at this. This is short covering, my friend. Look at that big candle, right? We should expect some selling at that overnight high. No problem, Charles. Remember that show, Charles in Charge? It was like an 80s sitcom. That's what I think of when I see Charles. Many retail don't factor in that they have to buy players. I'm sorry, Dave. Don't quite understand that. So we take that overnight high. Now, if I was long a couple of thousand contracts, I'd be banging them out with both hands here because it's 3 o'clock in the morning in New York. That is a poor high. which means sellers are competing at this price. Now, I don't know if I'd short that, but if I was short, my stop would be 35 and a quarter. I'd be looking for bids at 31. Remember that show, Charles in Charge? Yes, retail don't know that size traders have to cover size. So when a size trader comes into the market, people always go, well, why don't they cover at a cheaper price? Well, if you got to buy 5,000 contracts, you got to buy them where you can, not where you want to. Sometimes in business, you don't get exactly what you want, right? This is just a sales chart. Whether it's a candle wax chart or it's a market profile chart, all these charts are telling us is how are sales going. You know, sales are going pretty good tonight, right? We had a little bit of a sale, and guess what? This is like when we took out the close here, this is like when Walmart has a Black Friday sale and everybody pushed up against the door, overwhelmed the security guards, so they raised prices. When the candles get small like this is distribution, right? Accumulation, distribution. Markdown back to the cost basis of the accumulation zone. Remember, folks, it's not a hot tub, it's a market. We are here to distribute inventory. Unfortunately, nobody ever talks about inventory. They don't talk about cost basis. It's surprising how many traders I go, what's your cost basis? Right? They're like, huh? Like, you should know your cost basis because that's how much you paid for your product. How are you going to do business if you don't know how much you paid for your product? You got to be on top of these things, right? The only thing you should care about is where I'm going to do business, and am I going to do good business or am I going to make stupid decisions, right? So we try and take you from that, oh my God, what am I going to do, to this is my trading plan, right? This is, I only execute when this happens, right? Yeah, you're completely right, Dave. So the blue area is the cost basis, right? This is where the inventory was priced. And what I did was I used this area as the cost basis, right? This is that back and forth, right? This is the open. There's the cost basis, and this is 2 times profit. This is 2 times discount. Now, if we take out 37 quarter, you'll go into 4 times profit. It's real simple. People are like, what are your levels based on? They're based on frickin' common sense and how the business works, right? You don't have to, you know, you don't have to use all sorts of fancy indicators, right? Now, I know the Fibonacci crowd, that stuff works. I don't know how it works, but I don't use it. I like the name Fibonacci. I think in my next life, I think that's going to be my last name. What's your name? I am Fibonacci. I think that would be cool. I am Fibonacci. What do you want? Jewels? I'm a very extravagant man. I think Fibonacci would be a cool last name. Just not even like a first name, just Fibonacci. Who are you? I'm Fibonacci. What do you want? You want jewels? I'm a very extravagant man. So now we're taking that overnight high. You got to laugh in this business, right? You got to have a laugh, right? Signore Fibonacci, right? Get him an espresso. See, when you take that overnight high, anyone who was short under that overnight high, now they're scrambling, right? This is like when you force Tom Brady out of the pocket, right? And he's forced to scramble, right? So the shorts are scrambling now. So on backfilling, on the move back down, we're going to look for bids at that old overnight high, around 35. If that holds, then this stupid thing is going to, because we had a poor high yesterday, right? When we got into that gap, all right? Because there were sellers competing. So I would say that's an area of interest for me and everybody else, right? Because everybody can see the previous day high, right? So let's see what we do now, right? Our little friend yesterday really screwed up the markets because, everybody thought there was going to be a huge problem. He just came out and said, I was just screwed with everyone, right? Now let's see if we get bids at 35. Now what happens if we break 35? That means the size longs, right, are competing. See, look, did you see the reaction? Did you see how we came down here? And it looks like, you know how you sit on a chair that's got a tack or a nail and you sit and you jump, right? That's the reaction you're looking for. Use chart replay to watch that. So if you were short here, this is one of those areas where you'd be looking to cover. That's how you use this information in a practical manner, right? I wouldn't be going long there right now because we are at 2 times cost basis. So this is like you're buying a Cadillac at 50 grand when the advertised price is 35, right? Can you sell it at 60? Maybe I'll wait till it goes on sale. You know what I mean? Remember, sales chart. Now we're filling those unfilled buy orders. Where's the next place I'd be looking for bids? When the top of that candle, L took out K at 32. If we get underneath 35, 32 is your target. Just around here. Okay? For people who are just joining us, this is a market profile chart. And this is just a fancy way of looking at a half-hour candle chart. That's all it is. If you don't have market profile, that's not a problem. Just use a half-hour candle chart. Right? So what I do is this chart is a map of the city. And then when I want to trade, I go into this area, and this is the map of the neighborhood. So I can navigate that. Right? That's all it is. And you could use both. You could use it for scalp trading. You could use it for position trading. You could use it for swing trading. Right? Well, that's great, broken candlesticks. What I'm here is I'm not talking down about people. I'm just trying to tell you how the business works. Take it for what you will. I care about people, so I don't like them being hoodwinked. If you don't like that, and you're older than me, that's fine. Right? I don't like when people take advantage of other people and try and sell them on crap that doesn't work. And there's a huge amount of that. And because I take retail traders after they've been used and abused and try and fix them and help them make money, that's why I talk like this. If I offend you, I'm sorry. But I don't really stand for a lot of BS. I've been doing this for 34 years. I've lost 14 friends. I've had a heart attack. I've been through things in this business that frankly other people wouldn't be able to survive. So I'm trying to use the benefit of my experience to help you guys. Right? I'm not a YouTuber. Right? I'm an ex-institutional trader and a deal guy. So take that for what it is. If you find me offensive, I apologize for that. I'm just trying to keep people on the right track. Right? I don't use flowery talk. I'm getting a little too old to entertain things that don't work. I hope you understand. I don't know when telling the truth became toxic. I hope I'm taking your statement the right way. Right? Every day I have people who come to me, I lost 5 grand. I lost the down payment on my house. I'm in debt. I took this trading course and I paid $10,000 for it, and I've done nothing but lose money. So I don't have to do this. I could go and do a deal and make $50 million in a day, right? I do this because I like people and because I like helping people. Right? That's why we charge $29 for our room. We're not getting rich off of this, right? Yeah, every day I have some guy come to me. I have people who have lost hundreds of thousands of dollars who haven't told their family, and they come to me with all their problems. So I try and sort them out. So it's pretty much it, right? Take it for what it is. You're a human being. You're older than I am. If you don't want to listen, thank you for joining us. I wish you the best. But I'm not going to lie to you guys. And I'm not crapping on other people. I'm just trying to tell you the truth. I don't know how it came to be in this day and age when people try and tell you the truth, they get shit on. And that's why you guys lose money. There's a seller at 37 and a quarter. Let's see if this price stability between 36 and 37 brings in buyers. Because if we run that 38 stop, we'll start creeping higher. Order flow trading is marketing. All trading is order flow trading. If you think order flow trading is a special thing, you've been lied to, right? I try and expose the BS in trading education because I know there are people out there who charge $500 a month for a room and none of the people in those rooms make any money. So, Mr. Broken Candlesticks, I appreciate your comment and I wish you the best. Thanks, Nate. Watch the offer. As the offer raises, that means the sellers are seeing buyers and they're raising price. So if you were short under 37, I'd start covering or I'd start cutting position size and you'd manage your risk with size. Because the natural tendency at 2 times cost basis, right, is to short here, thinking that you're going to move lower. But when you see that offer moving higher, the position is now underneath us. Right? So we're going to take that position and we're going to sell it for profit. Every chart is an order flow chart. That's what they don't tell you. They try and sell you expensive charting software saying it's specialized order flow software. Every chart is an order flow chart. A chart is a representation of the transactions. Right? Everyone is an order flow trader, whether you know it or not. Sellers will always try and get the highest price that they can, right? They have size to sell. If your cost basis is at 30 or 32, it doesn't matter whether you sell at 39 or 38 or 37. But of course, because it's a business, you would prefer to sell at 39, right? Now let's see if those sellers will compete. You know that the market was bid here, right? You can see the bids under 34. So if you are a short seller and say you're thinking, okay, this is a look above and fail of 37.25, right? I would wait till this candle closes. And if this candle closes under 37.25, you have a legitimate reason to take a short, but you'd put your stop at around 37.5, 38. And I would definitely put a bid in here at 34.25 to see if you could get any product, right? This is how you trade with common sense. So say, wait till this candle. See how it's offering above 37.25? That is practical information you can use, right? Give it another 10 seconds. Wait for the next candle to open. If the next candle opens under 37.25, you can take a little short and put your stop at 38. So just watch the offer, right? So you hit the ask, you say you're short 36, 36 and a half, right? Put a stop at 37.25. Put some bids down here at 34.75 and see if you get filled. You're scalping, right? You're testing the order flow. And if you're wrong, you don't lose a lot of money. I don't redraw my balance zones unless we get a massive move higher because I always want to know where my cost basis is, right? Your cost basis is not going to change. Where the size traders paid for their product, that's not going to change. So if I buy 1,000 apples and I pay 30 cents for those apples, the price goes and I sell them at 70 cents, I wouldn't have to redraw my balance zone, right? Does that make sense? Good. Right? So this is an area where you're at a level where there is likely to be chop. So if I was short 36 and a half, 36 and a quarter, and this candle stays above 37 and a quarter, I'm going to scratch this trade, right? Because I'm scalping and I'm just poking around. I could be wrong. It could wait another couple of minutes and then drop. But I don't know. So right now, we know we have a seller here. Right? We have a seller at 38.25. If we lose that seller, the next level is going to be 39.5, where they're going to sell. So if you're short 36 and you want to give it that much room, see how the offer is lifting? Over 38.25? There you go. So had I not scrubbed that trade at 37.25, 37.5, now I'd be further in the red. Does everybody understand that? I shorted 2 micros at 36.25 and half, right? And then the market did this, and I covered at 37.5. So I took the hit instead of waiting and being offside 3 points. I took a 1 point loss. That's how you save money. Make sense? That's how you save money. You don't want to, you only, the capital that you allocate to your trades, yeah, you could always get back in, right, Nate? Market's not going anywhere. It's not packing up its tents and leaving, right? So you could always re-enter the trade. Not a big deal, right? Now you see these sellers are up here, right? You know that there's going to be sellers at that overnight high because that's where they initiated before. If we take out that candle, anyone who is short who's using that as a stop is going to be forced to cover, and the market will do this. Shorting distribution is very hard, especially after a day like yesterday, when we have a massive amount of people who are short under 6,900, right? This is where the inventory was accumulated, right? This is the accumulation area. But the people who shorted where everybody was buying, they're being forced to cover at higher prices. So the buyers aren't in charge, right? Would you rather pay 68.80 or 69.34? Or I mean 69.40? I would rather pay this. If I'm short something, if I sold something I don't own here where everybody was buying it, and they start raising price, I'm in trouble, right? And that's why, you see, we're slowly creeping up. Now, the problem with this price action is it's very, it sucks you in because it's slow. So people say they quote unquote feel that the market is weak. They feel it's trading heavy. But because we don't have humans executing anymore, because we have electronic execution, those algorithms will stop, start, right? It's like those new cars where you stop at a stoplight and your engine shuts off and then it starts up automatically again? It's the same kind of concept. When the order flow comes in, they execute. When the order flow doesn't come in, they back off, right? Because they're programmed to execute a couple of hundred trades in the time it takes us to do one. So when it's slow like this, what your best friend is that red line, that offer. Watch the offer. Watch the offer. If that offer is moving higher, right, if you don't have the bid-ask indicator, look at the lows of the candles. When the lows are moving higher, that means the buyers are following the sellers up because they are being forced to pay higher. That is something that you don't want to short. If you are long at 37 and you see that offer moving higher, that's a beautiful thing. But if you're short at 37 and you see that offer moving higher like it is, then you know you're in trouble and you can cut your risk, right? So the target is now 45, where the rest of that gap is, up to 69.60. Once we get up here, question is, what's here at 3 o'clock in the morning? How many active orders are here? Right? You guys like to use that term resting orders. What kind of order flow is in that gap? And this is what I was worried about yesterday for my short selling friends, is because if we fill that gap, that means that so many people got short under 6,900 that they're buying. See how big this candle is? That is what we call a short covering candle. Look at that. And I know because I get paid a lot of money to create short squeezes. So we get the product and you go to buy it here, I raise the price here. You go to buy it here, I raise the price here. You know how that works? I'm the seller. I've got the supply here. And I know that you're short 1,000 contracts or 500, let's say. And you go to buy 5,000 or 1,500 contracts at 41. I can sell you 10. Where do you stand? I'm 42. Can I buy 500 there? I could sell you 10. Where do you stand? 43. Right? And then now you're in trouble. See? The algorithms do what traders used to do. They sense that order flow and they raise price accordingly or lower price accordingly in order to fill the orders, right? Order flow is a fancy way of saying customer traffic. The smaller the candles, the slower the market. The larger the candles, the larger the orders that are coming in that are creating that candle. So you don't need to look inside the candle. You see the size of it, right? You see the size of it. Ian, that is what we call a weak high. You're close. Just zigged when you zagged. There's a poor high and a weak high. A poor high is one tick of excess. A weak high is, think of real estate, location. You see? So if you were short 45, you'd have your stop here at 46, and then you go put some bids down here, right? That's just a little persnickety market profile thing, right? There's a poor high, which is how it looks, and a weak high, which is where it is. So we like to use market profile, and we like to make it practical for you. So just remember that, write it down. Thank you, everyone. Have a wonderful trading day. If you want to learn how to trade this crazy market and do it well, be consistently profitable, come check us out at tradingsyndicate.org. I want to thank you folks for being with us. Have a wonderful trading day. Be sharp out there. Be shrewd. Don't take candy from strange market makers. Okay? If you don't understand what's going on, sit and watch. Right? There's nothing wrong with sitting and watching. This is not an easy market to trade. Right? It's not an easy market to trade. So just manage your risk. Hang on to your money. Keep your head on a swivel. It's a great market to learn in, though. So come visit us at the Trading Syndicate, and I hope you all have a wonderful day. Appreciate you guys. Thanks for joining me. We'll see you at 9 a.m. Eastern Time. Bye for now.